And so what happens? Well, prices go up because, again, you gave everybody else $2.5 trillion. So they're like, well, I used to pay $1 for your wheel. I'm willing to pay you $2 now. Just make the wheel. Give it to me before you give it to somebody else. So that is like the classic definition of a supply-side recession.
The world's largest economy keeps underperforming and is on the brink of no return. If the recent trend continues, the United States will be headed for a prolonged recession with many years of pain. However, this was not just a sudden event. In fact, experts have seen this from miles away, and Chamath Palihapitiya has been one of the prominent voices leading the wake-up call. What was Chamath's forecast? How is the United States handling its financial crisis as the world's largest economy? What kind of future lies ahead? Join us as we discuss Chamath's predictions on the economic catastrophe. Chamath Palihapitiya is a venture capitalist worth anywhere from $800 to $1.2 billion. He was once a Facebook employee, growing the social media company to 1 billion users before he departed. The investor has warned of an imminent U.S. recession and criticized the Federal Reserve for inflating asset prices and encouraging careless speculation. Chamath, the CEO of Social Capital, attacked the U.S. Federal Reserve for continuing to keep interest rates at historically low levels in recent years. Due to the poor returns offered by savings accounts and bonds, investors were compelled to purchase riskier assets like stocks and cryptocurrencies as a result of the loose monetary policy. We've learned over the past 2 years what governments are willing to do in the event of supply and demand shocks. They turn on the money printer and produce massive quantities of stimulus. But we've reached a point where if these shocks have a truly significant global impact, the Federal Reserve, the ECB, the Bank of Canada, and the Bank of Japan are expected to act together to inject liquidity into these markets in order to lessen the repercussions. Repercussions of what? Of the ripple effect of the Russia-Ukraine war. Recently, Chamath Palihapitiya made some strong statements against the conflict between Russia and Ukraine. According to him, the conflict is not like other wars and will have a significant influence on investors, pension plans, and cryptocurrencies. The US unveiled a slew of penalties against Russia's central bank during the past few months. The European Union did the same, and as a result of these sanctions, the Central Bank of Russia will be unable to convert assets worth $643 billion that are held in US dollars and euros into their own currency, the ruble. The restriction also bans Russia from using its National Wealth Fund, which serves as a sovereign wealth fund for emergencies. As an added measure, the US and EU have said that all Russian banks will lose access to SWIFT, with the exception of those that deal with energy. The biggest global network for starting international payments is SWIFT, so this is one of the harshest economic measures that could be done. Before now, the EU and the US have been wary about sanctioning Russia because Russian-EU trade relations made policymakers hesitant to impose severe sanctions on Russia. That's because Europe needs Russian oil. But many people, including Chamath, worry that Putin won't be able to end the invasion without looking foolish because of the severe sanctions imposed on Russia. This translates to the possibility of him acting irrationally if he feels helpless. As a result, it might be beneficial for the US and its allies to take a detour, giving Putin a chance to de-escalate the conflict. This is also referred to as a détente, which infers that the West and Russia can reach an understanding and terminate the war. But first, sanctions must be put in place to pressure Putin to de-escalate the conflict. Chamath believed that this would be the intended outcome, but whether we like it or not, financial infrastructure is undoubtedly the most significant infrastructure in the world. Even energy infrastructure is usually more regional. The financial payments infrastructure is the only type of infrastructure that is really global and universal, whereas other types of infrastructure are regional. And you know, when you blacklist someone from these organizations and networks, what actually happens is that you can really cripple a nation or an entity. For this reason, people underestimate the severity of economic sanctions when they are applied properly. There are currently no measures in place to limit Russia's energy exports because of worries that implementing such sanctions would send the EU economies into a tailspin. As a result, except for Russia and Western businesses with exposure to Russia, the economic effects of the sanctions, as they are now announced, will be negligible. The two countries that will suffer the most from the conflict's economic effects this year are Russia and Ukraine. Energy, supply chain, and trade shocks have affected the EU and will continue to do so. Naturally, this would have a detrimental impact on enterprises with significant alternative investments like Tesla. But sustainable energy solutions simply cannot react quickly enough to offset Russia's oil and gas exports. Even Elon Musk made this follow-up tweet: "Increased oil and gas production in the short term is critical, or people around the world will be placed under great duress. This is not a question of money, it is the question of having enough energy to power civilization." So when Chamath talks about assets denominated in US dollars, he is referring to the strength of the US currency. Foreign currency cash and interest-bearing government bonds make up foreign exchange reserves, and the relevant foreign currency is used to pay these interest payments. For instance, interest on US government bonds is paid in dollars, whereas interest on European government bonds is paid in euros. US dollars make up about 62% of all foreign exchange reserves held globally. Since the US dollar serves as the world's reserve currency, it is used in the great majority of cross-border transactions. The US dollar is used in the vast majority of international transactions, even when the US is not a party to the transaction. So the US dollar is also used on the vast majority of commodity markets, and because the dollar is widely recognized as a reserve currency and is reasonably stable, trading partners rarely have to worry about the value of their payments shifting much because the US government is known to back it. The danger that the US government will stop paying bond interest is little to non-existent for holders of US government bonds. To put this in perspective, about 58% of all loans provided by foreign banks are denominated in US dollars. But with Russia's national currency, that is clearly not the case. The ruble fell 41% in just 11 days of the Ukraine war. The assets priced in or denominated in US dollars are therefore moving in the direction of safety. This is demonstrated by the DXY index, also called the DXY, which is rising in level. The dollar is measured against a basket of 6 other global reserve currencies using the DXY. In a few days, the index soared to its highest point in almost 2 years. Chamath spoke about the advantages of war for the US dollar and the cryptocurrency market. The conventional opinion, according to the billionaire investor, holds that the US dollar is nearing the end of its useful life and that the war in Ukraine is the crypto boon we've all been waiting for. However, in actuality, the US dollar and Bitcoin are both in the lead at the moment. And just as other cryptocurrencies fall more when Bitcoin declines, other non-US denominated assets and currencies suffer when US assets decline. However, Russian stocks barely make up 2% of the MSCI Emerging Markets Fund, so Chamath responded that he doesn't view the decline in the market value of Russian enterprises as a problem. When asked about the potential loss in value of pension funds with European and US investors, he dispelled the worry by calling it a red herring, or just a pointless dive. The total market capitalization of all these companies on a global scale differs noticeably from the amount of total capex that these companies represent. And even if you reduce the equity values of some of these companies to zero, there still won't be much equity value left in the end. The investor and CEO claimed that money fleeing the system was to blame for this year's market collapse. Palihapitiya asserts that he believes people still have a sizable amount of savings. He was left to form his own opinion on the recession's initial stages. He went on to say that he detested having to deliver terrible news. However, a lot of money is still floating around the market, which will trigger a supply-side recession. However, he added that several accessible gauges point to impending economic shifts, such as the savings shortfall and the shift in the global economy to the second stage of the crisis. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.